Welcome back to Alberta Primetime. Will Alberta really be rolling in $5 billion surpluses again soon? Our Monday Money panel debates whether the province or you and I can bank on growth predictions in government's just released budget. Jim Yee is a financial educator and founder of retirehappy.ca. Shafik Hirani is director and senior executive financial advisor with Investors Group Calgary. And Beth Hamilton-Keene is a director and portfolio manager at Moore Investment Management, also in Calgary. Good evening, everybody.
Hi, Jen.
Good evening.
Hello.
Shafik, let me ask you about the projections in the Alberta government's budget. Does this seem reasonable?
You know, it seems very optimistic, and you got to understand Premier Redford's going into an election in 2 months from now. So I think some of the assumptions, they're targeting $40.8 billion in revenues, $41.3 billion in expenses, so a little bit of a deficit of about an $840 million deficit. So the budget, it's not balanced, but it's expected to be balanced in 3 years. And they do have a sustainability fund right now of $3.4 billion that they're going to live off of to sustain that budget. So it's not great, but it's a little bit rosy.
But talk to me about the growth, Beth, because critics are claiming the forecast in the budget is far too optimistic, especially on energy. How do the numbers compare to other analysts?
Well, certainly it does feel optimistic in terms of the oil prices that they're using in terms of forecasting out where the revenues are going to come from, and not to mention the natural gas prices. Obviously, when we look around locally here, we don't expect those kinds of levels of pricing in natural gas when we're doing our valuations, for instance, in companies. So it's pretty optimistic and pretty on the high value side. You really have to determine whether or not you think we're at the top of a commodity cycle or if we think these prices are sustainable. And when we're doing valuations on companies and trying to decide what they're worth, we're using much lower cost of production type numbers, and that's a little bit farther off from what the government's using right now in these forecasts.
In fact, we've got a graph to show you how optimistic they are. The Alberta provincial budget paints a pretty good economic future, 3.8% economic growth in the province, but double the bitumen royalties over the next 2 years to around $10 billion annually. And Jim, they're saying, well, these are oil sands projects that we know are coming online. They take years to happen, and now they're happening. How much of a difference will it make for you and I, everyday Albertans who need government services, if they're off even a few dollars on pricing?
Well, I think it is a dangerous game. I think when you're projecting revenues, it's a big, giant guess. It always has been. Every budget we go through this. But I think that the area that they can sort of have greater control and predictability over is probably the expense side of the equation. And so, and that's no different for us as individuals. When we look at our planning for the future, we're going to project revenues and expenses. It's hard to control the revenue side. It's hard to predict the revenue side, but we can all control our expenses. And I think that's what the government needs to focus on more, rather than trying to predict what these revenue growth numbers will be.
Shafik, there were some finance ministers not too long ago who would be incredibly conservative to the point that they were being criticized for that on budget day. What are you kidding? Those prices are way too low. But they would say, no, we don't want to spend money we don't have. A real shift here, do you think, at the legislature?
Yeah, the Alberta Finance Minister, Ron Liepert, he's really being pretty proactive. They're targeting 3 main points. And one thing about the budget is there are no new taxes. There is a lot of spending in very good areas. But the finance ministers, they're projecting a $99 price price for oil and a $3 price for gas. Well, gas right now is at $2. And if they're projecting a $3 price, that's a 50% increase in the next 2 years. So they are a little bit optimistic on those projections.
Beth, when we look at some of the specific things, $21 million to the child care program, which will provide full child care subsidies to families making $50,000 or less per year. How does that compare to, say, a supplement, a tax break, I suppose? Do you like the way the government's handled this or not?
I do like the way the government's handled this. To me, it delivers directly to where it's needed the most. You know, obviously a tax advantage goes much broader and will really have a better impact on those that have higher taxes. And so by delivering it in this way, you're getting directly to where the need is the most felt. And I think this is a far better way to do it. I'm sure those in the higher tax bracket would prefer the break, but I think this is a better, more direct way of getting at the issue.
Jim, seniors, a little more money there, $5 billion spending. Does the government spending align with how many more seniors are reaching retirement age?
Well, I mean, it's interesting because, you know, on the federal level, they're talking about cutting back on government programs, and here in Alberta, they're supplementing the Alberta Seniors Benefit. It really applies to those people that are making less than $24,000 as singles or $40,000 as couples, and a couple other means tests associated with that. So I think I agree with Beth. I think it's going to probably the group of people that need it the most. So.
Well, today we've got more turmoil over Greek debt, why that matters to you and what the latest trouble means. Also, RRSPs for Valentine's? That's next. Welcome back to Alberta Primetime. We have seen on the Monday Money panel Greece in the news. Well, markets finished up today after austerity measures there finally passed despite riots. Beth, investors worldwide perhaps relieved, but is the trouble really over in Greece, or for that matter in Europe or even Washington?
Well, the trouble officially, whether it got passed or not, that part's over. But no, this is still going to be a prolonged period of uncertainty and really continued issues for Europe in general. I think that you know, this particular item being passed is a bit of a relief, and you've seen that in the markets today. But well, I don't think anybody's fooling themselves by thinking that this is a resolution. We can wipe our hands and ignore the issue and go forward. This is a long-term issue that will have to be worked through over a very long period of time, not just for Greece, but for many of the countries in Europe.
So, Shafik, does that add a significant element of risk to anybody looking to expand their RSPs, their holdings on the stock markets, to any kind of aggressive growth stance?
Yeah, it certainly does, because right now, whenever there's uncertainty, you drive slower into a fog. And if there's no clarity of what the resolution for Greece is, people are tentative, and they tend to, whenever we're tentative, we tend to sort of put our heads in the sand. You know, the one thing about Greece is that, you know, they did come through with a bailout. They are still in significant trouble. They have 25% unemployment. And this spread over fact is what's scaring people, spreading to Spain, which also has 20% unemployment. And there is a bounce in the euro. I would expect that to be a short-term bounce, and I would still think the euro is going down.
Jim, while people we'll just get Jim in here really quickly. While people are looking at their RSPs, their holdings, TFSAs, we're hearing about the RSP deadline coming up at the end of February. A TFSA, we don't need to worry about a deadline, correct?
Yeah, TFSAs are no deadline. Just the RSP limit is 60 days after the end of the year. So this year it's a leap year, February 29th. People should check with their financial institutions.
That's for RSPs.
For RSPs, about when they're how they're handling the deadline. With TFSAs, there are no deadlines. The thing I hear over and over again this year is a lot of animosity towards the RSP. Everyone seems to be pro TFSA, and I would just encourage people not to count the RSP completely out. They still have merits, and you know, for a lot of people, they'll win in terms of the tax deduction and the tax being taken out at the end in retirement. So,
Beth, there does seem to be what Jim's describing, some bitterness towards the whole RRSP, and even the pitch. The pitchmen are out in full force. As targets, Albertans might feel a little bit like the planners are trying to take advantage of the deadline. But if you've got a conservative RRSP that's making you a quarter point versus a 3% GIC that your planner talked you out of because it's not going to keep up with inflation, you can understand people's frustration.
Well, it's not the vehicle, it's the underlying investment. You can buy those same GICs in your RSP as you can buy them in your tax-free savings account. I think what really the decision has to be about is tax-free or RSP, really the decision is about what's the capital for. Is this long-term savings? Is this something that you can put away for a while? You definitely want it working for you. You definitely need to be investing in things that you're comfortable with. I wouldn't discount equity investments just because of what's happening in Europe. I think that provides opportunity just as it provides risk. You have to be very cautious with your investments. With your tax-free savings accounts, my recommendation to most investors is if you would have normally non-registered money, so money that you would have sitting out of an RSP or sitting out of paying off your mortgage and that kind of thing, then yes, definitely sock that away into a tax-free savings account. Again, depending on the need for the tax-free savings account, if it's short-term, keep it safe. Go ahead and buy those GICs that you can redeem and cash in. The banks are all paying a premium for that right now relative to what the bond markets are. Go ahead and do that. But if it's long-term money, definitely continue to invest it. I still think in equity markets and at least in balanced portfolios overall.
Okay. Shafik, among the RRSP coverage in the media, a thought being given to, and here maybe it's the pitch again, spousal deposits for Valentine's Day. I don't know. Yeah. What do you think?
I'm not a fan. I mean, there are certain things that we just shouldn't touch, and I think when you mix the love and the finances, they're due for a separation eventually. So keep Valentine's Day romantic, keep money serious.
Well, now let me wade in here a little bit. On a spousal RSP, if a husband contributes to the wife's RSP, he's getting a benefit here. So you don't want to, you don't really want to cage that too much. He gets the tax return benefit. She'll get the eventual monetary benefit in the long term, but you definitely want to make sure that it's presented in its fullest spectrum.
Flowers first.
But I do think Valentine's Day is a great opportunity to talk about finances. As much as you don't think they mix, I think it's a great time to talk about the goals, the long-term objectives. Where do you want to retire? What does that retirement look like? That's a great time to sit and dream and plan it out.
Okay. Jim, final word on spousal RSPs?
Put the cash in a box of chocolates and let her decide what she wants to do with it.
Thank you for your time, everybody, tonight. Jim Yee is a financial educator and founder of retirehappy.ca. Shafik Hirani is Director and Senior Executive Financial Advisor with Investors Group Calgary. And Beth Hamilton-Keene is a Director and Portfolio Manager at Moore Investment Management.